But today we are starting with the crypto crash that continues to deepen this morning. Bitcoin lost more ground and fell below the $34,000 level. Ether retreated 7.6% and touched 2,201, also the lowest since July. Crypto has come under widespread selling pressure in recent days, with traders pointing to hawkish signals from the Fed and a tech sell-off as reasons for traders to withdraw from riskier assets. This is our quick take focus of the day, and Sonali Basak, as always, is joining me now. Sonali, it's really been a wild swing for the crypto market more broadly. Friday alone saw 600 billion wiped out in Bitcoin, 1 trillion in the broader crypto market. And so this is really a story for sort of what's to come.
Yeah. On one hand, these are staggering numbers. On the other hand, Bitcoin is a highly volatile asset. Right. And you have to think about what is the floor? What is the level it's going to reach before it starts rebounding? Because otherwise you may lose more money from there. So here now is Mike McGlone. He's a Bloomberg Intelligence Senior Commodity Strategist, and Emily Graffeo, Bloomberg News cross-asset reporter. Thank you both for being here. This idea of the floor, Mike, what is the floor? Does it get to 30,000? Because that's a level we haven't seen for at least a year.
Well, it could get to 30,000, but actually it's only been a couple months ago. It was July, August at bottom there. The key thing to remember is long risk assets, which you mentioned earlier, is fighting the Fed, and risk assets going down is helping the Fed. So I like to say, if you want to help the Fed, sell. The key thing about cryptos is they are the riskiest assets. They went up the most last year. They went up way too much. The speculative excesses in the dog coins are indicative of this space needs purging. It's getting it. But I think when the dust settles, it might take a little while. Bitcoin's going to come ahead. Remember, it's still a small part of global portfolios, and the big issue is the stock market's going down. What's happening is cryptos are a good leading indicator. I mean, they trade over the weekend, and Bitcoin this weekend told us the stock market's going to be down today.
Emily, jump in here. We have Emily on the phone with us. You've been paying attention to this for the past few days. Are crypto bulls still bullish, considering all the swings that we just talked about and sort of what Mike outlined?
Yeah, I mean, I think the crypto bulls, they're still confident that in the longer run, this is still an asset that they want to be in, but that doesn't mean that they're not expecting some more pain and some more volatility ahead. But I did speak to a couple crypto sources over the weekend, and they said, you know what, this is still an asset that has a limited supply. Only 21 million Bitcoin can ever be mined, and so that could provide some support, especially in an inflationary environment. That's really what they're looking towards. But they will acknowledge that it's a risk asset, and we are seeing a lot of risk assets come off with some expectations of tighter policy from the Federal Reserve.
You know, I'm wondering, does this start to debunk some of the things that we thought were true about Bitcoin? There was this thinking, Mike, that this was an uncorrelated asset. If it's not related to stocks, it's not necessarily related to the moves that you're seeing from the Federal Reserve. So now you're seeing it sell off with broader risk assets. Is there more of a correlation than people realized?
Right now, it's the period when all correlations go to 1, and that's the situation. When the S&P 500 breaks and it goes below its 200-day moving average, it might stay below it for a while this time. It's way overdue for that. All assets are fine, but it's the key thing that Emily said. Bitcoin supply is limited. It's being adopted a global digital reserve asset. The supply of crypto assets is unlimited. I mean, there was almost 17,000 of them this year. They jumped up from double from last year and double from the year before. So the rules of economics does not play well for the broad crypto market, just like the stock market in 2000 before it went down because of the internet bubble. So I think that's the phase we're in, and I think the three stalwarts will come out ahead: Bitcoin, Ethereum, and the proliferation of crypto dollars in terms of market cap appreciation.
Mike, I actually wanted to ask you what you make of the options expiration that we saw over the weekend. There was a liquidation of more than $1.1 billion in crypto futures. What does that mean for the price of Bitcoin and just the overall strength of the market right now if we're seeing these options expirations?
One of the lessons I learned in options is if you're long puts for protection, usually the market goes down after my puts expire. That's probably what happened. I hate to say it, but it's just the way options work. And if you short the puts, you're getting hammered. I think that's what's happening expunging the leverage excesses in the space. So people who have been trading options and a lot of leverage in this space, they're getting stopped out. And what's happening is the longer term buy and hold types who know they have to get allocated to this space because they're still at zero below will be buying these dips. And that's why I think Bitcoin to come out ahead. It looks to me kind of like gold did in 2008 when the market collapsed, gold bottomed and took off. And I think the best performing assets just will end up being long bonds, gold, and eventually Bitcoin.
So speaking of gold versus Bitcoin, gold is actually up on the year, Mike. And so I'm wondering, for the people who were making the comparison before, does that comparison also start to break down?
Well, it's funny. We're going back to the old analog for protection, and the old analog gold has reached maximum disdain. I mean, everybody hates it, and it's so much competition from the stock market going up and so much competition for Bitcoin. So I think the prudent investors will say, okay, I'll buy some of that. And I think that's a key thing with also long bonds. Everybody thinks, okay, everybody says I'm not supposed to buy them, yet the yield's been declining for 40 years. Maybe I'll buy some of that. Most notably, if this purging keeps happening. Remember, the stock market's the most expensive ever. It's giving back some of those gains. It's reducing inflation. If it helps the Fed do its job, then that's better. But right now, there's going to be no help for risk assets from the Fed, and that's what market's starting to realize.
Mike, do you still see Bitcoin going to 100,000? And I know you said you see Bitcoin coming out on top, but are there other coins that you think might potentially bounce back in 2022?
So I do. I think it's a matter of time. Maybe not this year, but it's just a matter of time. The key fact about Bitcoin is supply is clearly down by code. Demand and adoption are increasing. Unless that changes, which I don't think it's going to, price must go up over time. And it's just a matter of time it gets to 100,000. Now, the key thing in crypto assets is so much speculation. People just buying to sell, buy high, sell higher. That's got to get purged, and it's getting purged. Ethereum is building the block, and it should do well. And the bottom line to remember with crypto dollars is they're all based on Ethereum tokens. So there's a foundation building akin to what happened in 2000. It came out with Amazon and Google.
You know, Emily, I'm really curious about whether there's a safer way to engage with cryptocurrency right now, given that there are so many options. From the price movements we've seen this year, are you better off buying Bitcoin, or were you better off buying an ETF or the Bitcoin Trust, the Grayscale Trust?
Right. It's interesting because a lot of these other products, like the Bitcoin ETF, it's based on futures. So it doesn't really make it that less risky than just buying Bitcoin, even if Bitcoin is very volatile. I have heard from people who say this is not really a retail-friendly product because there's lots of other roll costs and futures costs that go along with buying that. And then you look at the Grayscale Bitcoin Trust, and the discount is actually very steep right now. So in terms of a safe way to buy Bitcoin, I have had a few strategists say, look at trying to dollar cost average in. So if you're going to buy and you're interested in buying, instead of trying to time the market and find that one dip and go all in on a certain day, perhaps look at adding to a position over time. So that way you don't get completely whipsawed if you buy the price then continues to draw down a lot more.
Mike, you want to jump in?
Oh, yeah, I think Emily nailed it. You're supposed to scale in, don't use leverage. And that Bitcoin Trust basically is allowing you to buy Bitcoin now at almost 75 cents on the dollar. It's quite attractive. At some point, that's going to go away. But I think right now we're hitting those stops. And that's where oftentimes you get rid of the leverage people, and the longer-term buy and hold people win, as long as they're not, they're not just speculating. I think that's what's happening. Longer-term buy and hold people are looking at this opportunity to get in for the long term, and they don't plan on selling for 5, 10, maybe 20 years.
Mike, real quick here, what about catalysts? What is it going to take for the price to make a significant rebound? And, you know, you're right, there was one day in July it hit 29,000, but it popped right back up. So what is it going to take to bring this back to where are more levels that we have seen closer to most of last year?
I didn't hear which asset it was.
Bitcoin.
Oh, Bitcoin, yes. So the catalyst is that's what's happening right now. It bottomed at 29,000 last year when people hated it. It's starting to hate now, but right now it's the tide. The whole tide's going out, and when right now correlations are 1 and higher, at some point, I don't know what the catalyst can be. I think what's going to happen is watch that long bond, people looking for alternatives, and the stock market, when people start saying, okay, this might be a longer term correction, where do I want my money in the long term? Bitcoin, gold, longer bonds, I think will be the ones that come up.
Mike, thank you so much for joining us.